live stream this tonight. I've had such technical difficulties. Record it. Let's see. All right. So let me get logged in. Oh, God is so good. Great, great, great. Okay, so tonight we are going to begin market structure, guys. Market structure. Let's get to the Trade Academy. Okay. Now, as always, I'm going to leave the chat open. If y'all have any questions, ask. Otherwise, I'll assume you get it. But the way that Tradera, breaks it down is, it's about got to beat yourself in the head to not get it. So, unfortunately, because of time, we're only going to have time to go through this first video tonight. I have another meeting at 8 o'clock. But, hey, it's not a race, okay? It is not a race to get through this. So, let me...
All right, we are recording now. So, guys, tonight, market structure. I'm going to start off simple, and I'm going to build up to advanced. Now, we may not get to cover every topic tonight. So, let's go ahead and hop on in. We're going to get into the markets. Now, before I take you guys to the actual market, I want to start off over here in this little no man's zone because, it keeps it a little bit more clean for everybody. Now, the first thing that I'm going to tell you guys is the market is always in one of three conditions, okay? So I want you guys to write this down, whatever you need to, write it on a pad, write it on a wall, write it on your baby's forehead, write it somewhere. This is extremely important.
I want you guys to write this down because this is very extremely important. The market is always, always, always in one of three conditions, okay? One of three conditions.
Okay. If you guys can understand how to pull up any chart, any time frame, no matter the market, and be able to classify that chart into one of these three conditions, you will understand what kinds of trades, what kind of entries, what kind of analysis you need to be looking for, and you guys are going to start making a lot of money. Okay, so take this seriously, and I promise you guys, you will start to make a lot of money in the market. So, with that being said, condition number one is a bullish trend. Bullish trend, guys. This is the first condition the market can be in. Now, what does a bullish trend look like? A bullish trend looks like this. We're traveling up, obviously, right? We're bullish. We pull back. We travel up. We pull back, travel up, and we keep making higher highs and higher lows. That is what a bullish trend looks like, okay? Now, there's several key, I'm going to zoom into this. There are several key characteristics to this, all right? The first one that you need to note is that we are making higher lows. Okay, so there are higher lows being created. There are higher valleys. There are higher divots, however you want to look at that. there are higher lows being created at any given time. Now, there are also higher highs being created at any given time if the market is in a bullish trend. Okay, so guys, the second that you see that the market is no longer making higher highs or higher lows, you are no longer in a bullish trend. So what's that going to look like? The market breaches this, holds, and you will no longer be in a bullish trend. That is extremely important, guys. Extremely important. So this is what a bullish trend looks like. Higher highs, higher lows. And I'm going to do this very tedious step because...
And you guys hear me talk about this every morning while we're live trading in New York. Is it making higher highs and higher lows? Or is it making lower highs and lower lows? Okay, so this is very, very important. You guys need to draw this little picture and label it. Do whatever you got to do. Get this in your notes. But it won't be long that you're going to be able to pull up any chart and you're just going to know.
I want you all to understand this when we go into the charts and actually look practically and see what this really looks like, okay? And that's what we're going to do, guys. I'm going to make all of these statements. I'm going to write this out for you, and then we're going to go in the markets, and I'm going to prove to you guys that this is how the market moves and this is how you can trade the market. That way, you guys know you don't have to take my word for it. You can leave this with full confidence and understanding that this is real, okay? So, guys, that is a bullish trend. Now, the second condition you can have in the market is a bearish trend, okay? Nothing super advanced here. Very simple terminology. A bearish trend. Bearish meaning we are heading down. So what does that look like? Well, we head down. We pull back a little bit, we head down, we pull back a little bit, we head down, and this continues, okay? So, let me write that out here. Okay, so that is a bearish trend. Now, guys, same situation, just flip it, okay? Bearish trend means that we are making lower highs.
Get your sister in.
And we are making lower lows.
Get your
Very
sister
simple.
in.
So there are there are lower peaks coming down, there are lower lows coming down, and this is the definition, the basic professional definitions you will be taught if you go to apply to work at a hedge fund or any kind of financial institution at all. This is like basic 101, understanding how the market moves. Higher lows, higher highs, you're in an uptrend. Lower highs, lower lows, you are in a downtrend. That simple. Okay, now the third market condition that we can have is consolidation. Consolidation. Okay, what is consolidation? Consolidation pretty much means that we're not getting anywhere. We're not making higher lows, we're not making lower lows, we're just going completely sideways. Okay, now when you have consolidation, and it's going to look like this, it's going to be sideways. Okay, and guys, look at this. Okay, these are the three market conditions. The market is always in one of these three conditions. Now, why is that important? It's important because if you can open up a chart and simply identify which one of these conditions we are in at the given time, you will know what kind of trades you should be looking to take. So write this down, guys. If we are in a bullish trend, let's write this down here. Let's make it a little smaller. And let's make it, I don't know, let's make it blue. Why not? Okay. If you are in a bullish trend, what kind of trades do you think you should be looking to take? Let me know. Let me know what trades. I don't want to have to tell you. I want you guys to tell me what kind of trades you think if the market is going up. Exactly, right? So, guys, let me ask you this. If the market is going up, then why in the world would you be looking to take a sell trade? Why in the world? I don't care if your stochastics is so overbought that it's off the screen. I don't care where the Bollinger Band is at. I don't care what phase the moon is in. I don't care if you went to Taco Bell and they gypped you on your burrito. You are only looking for buy trades. I don't care. I don't care. You
I don't
only take
care.
buy trades, guys. This is going
I
to
don't
be
care.
a major, major key. And if you can just stick with this, you will see a huge difference in your trading. Buy trades only. And
That's how we caught what it was like up to 5,000 pips this morning in New York session. I don't care. We were selling.
I will give you guys examples in later webinars of where we can bend this rule slightly, but in general, guys, this is how you need to structure your approach to the market. Okay, now, what about a bearish trend, guys? If you open up a chart and you identify that you are in a bearish market condition because you are making lower highs and lower lows, and again, we're going to go into the charts. I'm going to show you guys practically how this works in a minute. What kind of trades should you be looking to take? Exactly, guys, sell trades. So why is it that so many people will open up a chart that's bearish by definition and start looking for buy trades? I'm going to tell you guys, and this is a major key, and I want y'all to write this down because you're going to continue to see it, and it's no matter how many times you see it, it's the wrong information. They are using technical analysis that is incorrect, okay? They're using technical analysis that is incorrect. Let me tell you guys something real quick that is going to change your trading forever, okay? The institutions run this market, okay? There's a difference. There are institutional traders and there are retail traders. Retail traders are most of you guys, okay? Even I am still considered a retail trader. Everyone is considered a retail trader if you're just, trading the market as an individual looking to make money. You are a retail trader. An institutional trader is someone who is working on the floor for a hedge fund or an institution, okay, or the government, okay, banks, all of those examples of institutional traders. Guys, institutional traders run this market. Institutional traders consistently make money out of the market, quite a bit of money, okay? And retail traders consistently, almost like you can just bet on it, are gonna lose. Guys, I have made so much money off of simply asking people what their bias was on a pair and just taking the opposite trade. I kid you not, I've made a lot of money. It's called retail counter trading, and there's a lot of money to be made from it because guess what, guys? That's what these institutions are doing. They know what analysis tools you guys are using. You know why? Because they're the ones that have put those tools into circulation. They're the ones that have put those into circulation, and they know what you guys are looking at. So they know that every time the market, let me show you guys, they know that every time right here, you guys are right here, and then you pull back, they know that in this moment, everyone's liquidating their buy positions. They're getting out of the market. They're starting to look for sell trades. Why is the market's going down? Stochastics is overbought. RSI is above the 80 line. You name it. Bollinger Band's up there. Doesn't matter what it is. They know what you're doing, and guess what? They're just waiting so that they can get in on the discounted price to continue the market in the current trend. That's all they're doing every time. And every single retail trader doesn't understand market structure is just consistently losing money. And these big guys and the people who really know what they're doing, they love it. They love it, and I love it. When I'm in the markets, I'm like, oh, look, I just saw a bunch of retail traders get killed right there. Time to enter the market, make some money. I mean, guys, this is real stuff. So the basics to understanding how to really make money from this market from a professional standpoint is understanding market structure, okay? Consolidation. So if we're in a bullish trend, you're taking buy trades only. If you're in a bearish trend, you're taking sell trades only. I don't care. If you're in consolidation, What kind of trades would you guys like to take if the market is going completely sideways? Give me some feedback. Is it time to stack a bunch of buy positions? Yeah, exactly. Jalissa, I like you, Jalissa. You already know it. Yep, that's right. Yep, you guys got it. Exactly. No trades, guys. This is what I like to call a no trading zone. No trading zone. I dropped analysis on EuroUSD a few weeks back publicly to my Facebook, and I basically explained that everyone who's been losing money on EuroUSD the past few weeks doesn't know what they're doing, because EuroUSD has been in flat consolidation. Guys, you can't make money. Listen to me. You cannot make money if you go long right here and you go long. You can't make money if we just keep going sideways. Where's the money to be made? There's no money. You're just going to keep going sideways. In fact, what's going to happen is you're either A, going to get whipsawed out of your position and take a loss, or B, you're just going to stay in until spread kills you so much you have nothing left. Okay? Meanwhile, you could have been trading another pair that has a very nice trade opportunity for you. Okay? So, and plus, like, it's big on psychology, guys. Like, nobody wants to sit there with a lot of money on the line and get whipsawed back and forth. Okay, guys, this is the no trading zone. And here's the other thing that's really important about consolidation. I want you guys to write this down. I don't care who has told you about, there's a lot of chart patterns out here, and I'm going to get into that in another video, but I don't care who has told you that as long as we've been trending down, this is going to break to the downside, so just stack sell positions. I hear that a lot, and I hear that being taught a lot. I hear everyone repeating it a lot. I don't care who has told you that, they are wrong. They are wrong. And here's why they are wrong. Guys, when the market is consolidating, you don't know if it's going to continue or if it's going to reverse. And anybody who tells you that you can 100% predict whether there's going to be a continuation or reversal is wrong. And honestly, they probably don't make their money from trading. They probably make their money from market. And when we talk about making your money from trading, you need to listen to the people who do. Okay? When you guys see a consolidation, what that should tell you is that there is no way you can possibly know which way the market's going to go. There are, take that with a grain of salt. There are different things we can apply to the market, right, to get kind of a general idea as to what we might expect. But we're not going to trade that. Okay, so I'm going to teach you guys, and we may not even get into it tonight, but I'm going to teach you guys how you enter the market and manage trades based on these different market conditions. Okay, now, before we get into anything else, does anybody have any questions about the 3 types of market conditions you can come across? So every time you open up a pair, you will see one of these 3 conditions in the live market. Any questions?
Anybody have any questions so far about anything? Does anybody have any questions? It's pretty well self-explanatory. But if you have any questions, I'll be glad to answer them. Just drop it in the chat if you do.
I will upload it to the group afterwards. I'm going to move on, and what I'm going to do is I'm going to clear all this off. So make sure you have taken the notes on this already. All right, now what I'm going to do is I'm going to come into this market, and I'm going to prove to you, so that you have the confidence in what I'm saying, that this stuff is real, it works, and this is how the market moves, okay? So literally, I've just got E pulled up on 4 hour. It doesn't matter. You guys can tell me to pull up any pair. I will go on the 1 minute time frame on the most BS pair you could ever think of, and I'll show you that this stuff works. It literally does not matter. It works consistently. Okay, check this out, guys. Is the market going down or up? Down, right? Obviously. So let's see if we can follow structure down. Let me lower low created, lower high created, lower low created, lower high created, lower low created, lower high created, lower low created, lower high created. Look at this, guys. Look at this. Why in the world, and I know because I saw so many people doing it, guys, this is not long ago. So many people were trying to buy EU off in these zones, and there was no reason to buy EU. There was no reason to buy EU unless you just want to feed the institutional pockets. Because they were just adding positions. They were adding sell positions every time the market came back. Look at these guys. Look. Consistently. Now, we get down here. Tell me what happens. Tell me what happens when this breaks. What happens? We retrace, make a higher low, and then what? Boom, higher high. So if you guys took buy trades, guess what? You were eating. Here we go, higher highs, higher lows created, okay? So this condition, this market condition right here, and guys, it doesn't matter, there is market condition. Okay, it does not matter if you came into the market and you were right here. It doesn't matter if you came in and you were right here, or even at the very end. It really doesn't matter. Each time, no matter where you came into this market, it was bearish, flat out, okay? So if you took buy trades in here, guess what? Most likely, you're gonna lose. All right, so let me, whoops. All right, now, this area right in here, where as soon as you saw this break, guys, look at this. So this break, where's my little, there it is. Saw this swing right here break. You see this? This swing right here? As soon as it broke, you saw a higher high created. You saw a higher low created. What did the market do? Did it make a higher high and a higher low and then fly down? No, right? It continued to go up. And that's the key, guys. That's the key. So here's a bullish market condition. I did not spell bullish correctly. There we go. Awesome. All right. So, guys, here are two examples in front of you. We have a bearish market, we have a bullish market. And guess what's going to happen here? Guess what's going to happen here? We're going to break. We're going to make a lower low, okay, than we previously did. And we're going to retest, make a lower high. And guess what, guys? Game on. Here we go again. Here we go again. Just flying down. Look how well this was respected, guys. So look how well it's respected. Structure was right here. Structure was right here at this time, okay? Price flew down. Structure's still right here. Guess what? Came all the way back up to structure and then continued to go down. Lower high, lower low, lower high, lower low, lower high, lower low. Swung right here, breached it. It was game on from there. Up we go. You guys see how this works? See how this works? Now, let me see. Here we go. Here's a great example. So I've shown you two of the market conditions already. I've shown you a bullish condition. I've shown you a bearish condition. Now I'm going to show you the consolidation. So right here, we have a little bit of consolidation. Y'all see this? We're not necessarily making higher highs. We're not necessarily making higher lows. We're just kind of going sideways. This right here is an example of consolidation. And then what's going to happen is we're going to break this consolidation. We're going to retest. And guess what? We're going to go right back into a consolidation. We're not really getting anywhere, guys. The market's not really trending. And guys, I want you to take note. I want you to take note. We had two different consolidation zones here. Both of them, you can say that you were in an uptrend going into the zone, but guess what? Each time they broke in a different direction. You cannot predict the direction just based on the current trend. It can break either way. Guys, consolidation zones exist for a reason, for a very important institutional reason, guys. When there is consolidation, it means that very large players are battling it out back and forth. Okay, it means that the market, when I say the market, I mean the people who actually move the market, which is not all of you guys and me with, 100K and under accounts. These are people that move multi-billion dollars of orders at any given time, guys. These guys are battling it out. There's people with sell orders right here. There's people with buy orders right here, and they're going back and forth. And the fundamentals aren't heavy enough to push the market, and everyone's waiting to see what's going to happen. So for everyone who tells you for sure we're going to break out and do this, and this is what we're going to do, look for that. They don't know what to do. Consolidation. Man, this is my caps lock. Consolidation. Condition. Okay. So, what's up, Charles? Guys, sorry if you have commented and asked me something. I have not seen any questions yet, so just repeat the question if you do have one. So, guys, I have shown y'all all three types of market condition right here in front of you, and I've just worked my way from the left to the right, not stopping. And guys, I can continue to do this. And what I want y'all to understand is that no matter what chart it's in one of these
away from me.
See how it broke out, downward, kills down, no retest. You have to leave that troll. Yeah, so Charles, here's the thing. There is almost always a retest, but it doesn't necessarily mean that you should get in. Like, I'd be willing to bet if I go down into the lower time, if you go low enough, there's always a retest, A. But B, the retest that took place here was right here. And it was a sell trade. It was a sell trade, but it's not the retest that everyone typically looks for. They look for a break, real fast retest situation. That's not always how it's going to go. Sometimes it's going to just totally take off, and when it comes back, that level is still important. You know, like that level's always been important. But yeah, explains so well my questions. Awesome, awesome. It's a 4-hour time frame, the best for marking the chart, seeing the trend better. Ashley, I can go on to any time frame and do this exact same little practice right here. So I'm gonna place my support resistance lines, please. Misty did a video on support resistance in the group, and I will cover support resistance again in a later video. In a later video, this video we're really looking at. Are you familiar with pivot points? Yes, Michael, I do. I am very familiar with pivot points. Pivot points aren't bad. Pivot points are based on institutional algorithms, which is why they the trading room. Okay, so I'm going to continue talking about market structure while I have time to do so, since that is the topic of this video. Okay, so why don't we go pull up GJ. Okay, let's talk about GJ. So everyone's asking about entries. I'm going to give you guys a little foreshadowing here on how entries work. Okay, a little foreshadowing. We are in a bullish trend. Bullish trend, bullish trend, bullish trend. Guys, look how well this works. Why would anybody have been selling anything in here? And I don't care what completes, guys. Look, I don't care. You guys who trade the harmonic scanner, if you understand structure, you understand why this trade lost. And you understand when you need to actually take those trades. Guys, I can go into so much detail on so many different types of analysis that if you understand market structure, will just completely change your trading. Okay, guys, so here we are, we're bullish, right? We're nice and bullish. Price is going to come down, and we are still bullish as of this point, guys. Right in here, we're still bullish. Okay, we're still bullish. We need to see this level right here. We need to see this break, and once this breaks, we're going to be selling. Okay, now. What happens? We see a break, we see a retest, and then boom, there it was, pips. Right? Pips for days, right? What is this, like 200 pips? Yeah, like 200 pips. Guys, let me ask you something else too. Is there any reason at all to ever get out of this sell trade in here? Any reason? Why are you going to get out of the sell trade, guys? Market's still bearish. Guys, market is bearish until right in here. And then you can say, okay, now you've got an excuse to get out of your sell trade if you didn't find another one already from something else. But in terms of market structure, we've bearish the whole time. There's no reason. You enter on the one chart. On the one chart. I'm not sure exactly what you mean, iPhone. So yeah. Now let's do this, guys. Let's do this. Does anyone have any questions so far? The 1 hour chart. It honestly, it just depends. My analysis, I have a lot of different trading styles depending on what I'm looking at. If I'm doing structure on the 4 hour, like for instance, I can tell you right now that like right in this case, like I'm not going to start buying here on the 1 hour until I see that the 4 hour chart has proven to me that we're now in bullish structure, because you're just going to get faked out way too much. Anytime you see a wick going through structure, you lost a trade, unless you waited for the confirmation from the time frame that you analyzed. Okay, so very simple. Let's do some very simple drills, guys. Live market. Live market. Look how simple this is, guys. There needs to be no more issues after this session. Guys, you tell me. Are we bullish or are we bearish? We're bullish. Big, giant, scary red candle. I don't care.
I don't care.
I don't care.
Don't care.
I don't care. As of right now, guys, we are bullish until we are proven otherwise.
Don't cut yourself.
Until, based on market structure at least, until this breaks and retests, we are bullish. Guys, the market's going to do one of these two things. It's that simple. All right, if it breaks this level to the downside, it's going to retest. It's going to make a lower low. At the very least, what it's going to do when it breaks this and retests is it will at least come back to retest the lows. Very least. Okay? Very simple. Bullish on GJ. Let's go. Let's go. Let's go back to EU. Everyone loves EU. Telling everyone not to trade EU. Guys, why am I telling everyone not to trade EU? Look at this nonsense. Who wants to sit through this crap? Nobody, right? But I will tackle it. I can tell you guys, though, that personally, like, I'm not going to trade EU unless it's on a higher time frame. Yeah, straight consolidation. Or I guess you could also do lower time frame as well. Let's do that, actually. So you guys see how this is sideways? I'm going to show you guys. I don't care. So it's consolidation. All right, I've got 10 minutes left. Zoom, just let me know. It's a consolidation on the 4 hour, right? If you guys want to trade EU, you're going to have to go to a higher time frame or a lower time frame. So I'll go down here to the 15-minute time frame. We can play this game all day long. All day long, baby. This. All day long. We can just play this game. Nice and bearish. Sell trades. Why are you buying?
What he said about being faked out was, hold on.
Ashley, I can go on to any time frame on any pair and do this exact same little practice right here. So I'm gonna place my support and resistance lines. Please. Easton did a video on support and resistance today in the group, and I will cover support and resistance again in a later video. This video we're really looking at. Are you familiar with pivot points? Yes, Michael, I do. I am very familiar with pivot points. Pivot points aren't bad. Pivot points are based on institutional algorithms, which is why they do. Okay, so why don't we let's go pull up GJ. Okay, let's talk about GJ. So everyone's asking about entries. I'm going to give you guys a little foreshadowing here on how entries work. Okay, a little foreshadowing. We are in a bullish trend. Bullish trend, bullish trend, bullish trend. Guys, look how well this works. Why would anybody have been selling anything in here? And I don't care what completes, guys. Look, I don't care. You guys who trade a harmonic scanner, if you understand structure, you understand why this trade lost. And you understand when you need to actually take those trades. Guys, I can go into so much detail on so many different types of analysis that if you understand market structure, will just completely change your trading. Okay, guys. So here we are, we're bullish, right? We're nice and bullish. Price is going to come down. And we are still bullish as of this point, guys. Right in here, we're still bullish. Okay, we're still bullish. We need to see this level right here. We need to see this break. And once this breaks, we're going to be selling. Okay? Now, what happens? We see a break, we see a retest, and then boom, there it was, pips. Right? Pips for days, right? What is this, like 200 pips? Yeah, like 200 pips. Guys, let me ask you something else too. Is there any reason at all to ever get out of this sell trade in here? Any reason? Why are you going to get out of the sell trade, guys? Market's still bearish. Guys, market is bearish until right in here. And then you can say, okay, now you've got an excuse to get out of your sell trade if you didn't find another one already from something else. But in terms of market structure, we've been bearish the whole time. There's no reason. You enter on the one chart. On the one chart. I'm not sure exactly what you mean, iPhone. So yeah. Now let's do this, guys. Let's do this. Does anyone have any questions so far? The 1 hour chart. It honestly just depends. My analysis, I have a lot of different trading styles depending on what I'm looking at. If I'm doing structure on the 4 hour, like for instance, I can tell you right now that like right in this case, like I'm not going to start buying here on the 1 hour until I see that the 4 hour chart has proven to me that we're now in bullish structure, because you're just going to get faked out way too much. Anytime you see a wick going through structure, you lost a trade, unless you waited for the confirmation from the time frame that you analyzed. Okay, so very simple. Let's do some very simple drills, guys. Live market. Live market. Look how simple this is, guys. There needs to be no more issues after this session. Guys, you tell me. Are we bullish or are we bearish? We're bullish. Big, giant, scary red candle. I don't care. I don't care. I don't care. As of right now, guys, we are bullish until we are proven otherwise. Until, based on market structure at least, until this breaks and retests, we are bullish. Guys, the market's going to do one of these two things. It's that simple. All right? If it breaks this level to the downside, it's going to retest and it's going to make a lower low. At the very least, what it's going to do when it breaks this and retests is it will at least come back to retest the lows. Very least. Okay? Very simple. Bullish on GJ. Let's go. Let's go. Let's go back to EU. Everyone loves EU. Telling everyone not to trade EU. Guys, why am I telling everyone not to trade EU? Look at this nonsense. Who wants to sit through this crap? Nobody, right? But I will tackle it. I can tell you guys, though, that personally, like, I'm not going to trade EU unless it's on a higher time frame. Yeah, straight consolidation. Or I guess you could also do lower time frame as well. Let's do that, actually. So you guys see how this is sideways? I'm going to show you guys. I don't care. So it's consolidation. All right, I've got 10 minutes left. Zoom, just let me know. It's a consolidation on the 4 hour, right? If you guys want to trade EU, you're going to have to go to a higher time frame or a lower time frame. So I'll go down here to the 15-minute time frame. We can play this game all day long. All day long, baby. Look at this. All day long. We can just play this game. Nice and bearish. Sell trades. Why are you buying? Why are you buying? Doesn't make any sense to buy. Did we ever break structure in here? Structure was never breached in here, guys. When did structure breach? Right here. Structure breach. And guess what happens when it breached, guys? We pull back, and then boom, we made it higher high. This simple, guys. This works on any time frame. I don't care what the time frame is. I don't care what the chart is. It works consistently. Okay, works consistently. Okay, I want to pull out now. So I hope you guys can feel with the confidence that this works. I'm gonna do one more. I'm gonna show you guys one more concept. And then I'm going to leave you guys with a way you can practice this and get better at it, okay? So let's talk about the concept. Let me close out DJ here. Here's the concept. When price, let me get my little, here we go. Okay, when price is in an uptrend, for instance, okay? Here's how price likes to move, okay? So pay attention to this. Make notes of this, guys. Here's what I like to do personally on my charts. I'm going to, if we're in an uptrend, for instance, the most important level in an uptrend is the recent swing low. And here's why that is. The recent swing low is the point that's going to determine when the market is no longer bullish by the definition of market structure. So in this case, the recent swing low is right here. When this breaks, by definition of market structure, we are no longer bullish and we should be looking for sell trades. Now, it's not 100% true. You will take losses if you just focus it on that. But in general, 90% of the time and above, this is the concept. Okay? And guys, it doesn't matter what price does in here. It could do dances, it could do swirls, it could go up, down, left, right. Does not matter. If it remains above this level, it is bullish. Okay? Now, the other level I will mark, the second most important level, is the recent swing high, right over here. So what do we have? We have our recent swing high, and we have our recent swing low. Make sure you guys write this down. This is important. Always have your recent swing low marked. Always have your recent swing high marked. Here's why, guys. What price loves to do is come back and retest the recent swing high and then keep going. That's what it loves to do. It'll do that probably more than half the time, probably like 60, 70% of the time. It's going to come back to the recent swing high. It's going to find support. It's going to continue on. Now, part of that is because it's market structure. Part of that is because it lines up pretty well normally with Fibonacci ratios. And part of that is because it is a resistance turned support. So for those of you asking me about support and resistance right now, this is the most important support and resistance you can have marked on your chart, the market structure. Okay, those are the most important levels. I encourage you guys, go mark up all your support and resistance like you would traditionally do it, and then go mark the market structure and see which levels are more important. Okay, so guys, mark this down. Price loves to come back to right here, but price may also break that, and then guess what? Continue going. Time frame doesn't matter. Time frame doesn't matter. The market may break this and then continue going. So guess what, guys? For everyone who was using this as just a support and resistance level, who was just looking to take a buy off this no matter what, didn't wait for confluence, guess what? They're not going to get whipsawed once. They're going to get whipsawed here, and then they're going to get whipsawed again here, and they try and sell it. What's the problem, guys? Market's bullish. Guys, write this down. Right? This is so important, guys. Write this down. In a bullish trend, all.
Before you write this down, guys, I want to talk to you about what being whipsawed is. It is a term that is used in Forex. You know, it's slang. And whipsawed is like, you know those big saws that the lumberjacks use? One on each end to cut down the big trees. And they go back and forth and all the vibration and stuff being whip, back, whip, back, whip. That's being whipsawed. So when he's talking about being whipsawed, it's kind of like, you know, in those areas of like consolidation where I tell you guys, stay out. If it's going sideways, don't trade. If it's going sideways, don't trade. Because what happens if you try to get in a trade, you either don't get nowhere or you lose money. Okay, so that's when he's talking about being whipsawed. That's what he's talking about.
Resistances must break. Write this down. In a bullish trend, all resistances must break. How else are you going to continue to go up? They're going to break. In a bearish trend, all supports must break. How else are you going to go down? So guys, if you're going down, why are you trying to buy at every support? Doesn't make any sense. It's going to break every single time unless it's time for reversal. And you can't just sit there and trade reversal. What did we talk about earlier? The trend is your friend. Write this down too, because it's really important. This is where a lot of people lose money. You do understand this. In a consolidation market, all S and R will likely get whipsawed. What I mean by that, if the market is going sideways, guys, a lot of the technical analysis starts to break down. That's why we don't trade in a consolidation market. Okay, write these two things. They're very important. Okay, let's go back to this. Guys, market structure, it can come back. to the recent swing high is its favorite place to go.
What man?
Or second possibility, it could come through deeper and then still continue to go. Third possibility, it could come all the way back down to structure and then continue to go. Take a look at it in the market for yourself, guys. And you know what happens when price comes all the way back down to structure and then continues? You know what happens? This is when every single person who trades purely Fibonacci loses. This is when they lose. Because what do people who trade Fibonacci do? They grab their Fibonacci tool. Here's my little Fibonacci tool. Oh, there it is. They grab their Fibonacci tool. They pull it from the recent swing low to the swing high. They probably don't even know what that is, but they do it naturally because that's what they were taught. And then they buy off the 61.8, no matter what. And guess what? Every time they do that, and price comes back to structure and continues on, or digs a little deeper, they lose money, and they don't know why. This is why. So guys, really trading the market is about confluence, using multiple things together. Because guys, like you can use all of these technical analysis tools by themselves, and they're going to lose. Once you start bringing things together, you're going to start seeing that you start to win a lot more trades. Okay, Fibonacci works great. You know, as just a quick example, it's a whole other video for this. Fibonacci works great. You know what? It works a lot better when it aligns with the recent swing high, and you see a counter trend line break, and you see price action, and you see all those other things. Okay. With that being said, guys, so I hope you'll understand this. And the last possible thing that price can do is it can break the recent swing low, at which point what's going to happen is price is going to retrace and retrace to here and continue, or it may retrace even deeper and continue, or it may retrace all the way back up to the recent high and continue and still be valid. Okay, those are the only things market can do. Okay, that's simple. And I know my screen looks like a spider, but I hope y'all understand what I'm talking about here. Okay. All right. Last thing I want to leave you guys with for us time tonight is I want to leave y'all with a little homework assignment to practice this. And let's go back to someone give me a pair. Someone give me a pair. First pair I see, I'm going to pull up. GJ. All right. GJ it is. All right. Okay. Here we go. Now, this is the 15 minute. I'm going to go to 1 hour. All right, guys. Here is what I want y'all to do. I want y'all to pull up a pair, any pair. And yes, guys, you will notice that the lower you go, the messier things.
Okay.
Play with the money. There's a bunch of glass. Can we clean that up?
I don't know. Just let me finish class, guys. Okay, guys.
And what I'm talking about.
Well,
here.
okay.
Okay. All right. Last thing I want to leave you guys with for us time tonight.
Okay, guys. Homework. Okay. The people that are going to get this, and the people that are going to be at the end when we finish everything saying, Coach Misty, I don't get it, are going to pick the people that do not do their homework. Okay. Homework for tonight, guys. Is go to your TradingView account, www.tradingview.com. All right. So here we go, watching Coach Misty struggle with TradingView on a Mac because I don't know how to right click. But I want every one of you to go to your TradingView accounts. I can't believe my computer is so slow. If you don't have an account, you should. Okay, I want you guys to go to www.tradingview.com. Okay, make a free account. It's free. Pull up a chart. It could be any chart. It doesn't really matter. This is where we were doing support and resistance the other night. And I want you guys to come up here. Okay, I want you to grab this bar. See that? Okay. Trend line. I want you to come down here and click this so you stay in drawing mode, and I want you guys to practice. Market structure. Just follow with your thing, how price goes.
Hey, Mom. Sorry about your piggy, but Eva says she wants to buy another one for you.
Well, they're expensive.
She says she wants to use $100. I'm sorry, that really meant a lot to you.
I got it for my first Christmas. And you just go through here and you mark like this. Okay. And I literally want you guys to physically do this, okay? It's not, you may think it's mundane or whatever, but you need to do this. Can't tell you like how many hours I've sat and done this, and I have marked up structure, okay? So you've got market structure marked up, okay? Then I want you to send me a picture of it so that I know you're doing what I ask, okay? And then just watch, okay? So you've got it, okay, you've got it marked out. Now look, we're in an uptrend, okay? We're in an uptrend until when? Did this low break this low? No, it sure didn't. So technically, we are still in an uptrend, believe it or not. What? Did this low break this previous low? No, it's still considered a bullish market. Until when? Did this break? No, it landed right at it, but did it break that level and retest it? No. So by all means, look guys, we are still in a bullish market. So and we will stay in a bullish market. Look, right here. Did price break the previous low? No, it did not. Did not break the low. So technically, we're still in a bullish market. There's no reason to be in anything other than a buy. Okay, it goes up, up, up. Okay, so I don't want you to just do this on one screen. I want you to do it on several screens. Okay, so we did it right there. Okay, I want you to go back, and I kind of want you to. I didn't mean to screen that anyway. I want you to do it on several screens. I don't want it to really be. I don't know how I did that. Okay, here we go. I don't want it to be like kind of do it like that. And trend line. Okay, and then I want you to do it again. Okay? And do it again. And then I want you to tell me, because somewhere in like, you know, in this one, somewhere price will, all right, give me 1 minute, babe. Price will break structure in this one, and I want you to tell me where. Look at this. We're in an uptrend. We're in an uptrend. Big scary candle. Yeah, it dropped below, but guess what? It didn't drop below and retest. We are still in an uptrend. So I just want you guys to practice drawing these trend lines, following price, and I want to see some screenshots, okay? So what are you waiting for? Get off here, do your homework, and I will see you tomorrow night and in the chats. I love you guys. Have a good night.
Why can't I get no damn sound?
And I'll see you guys tomorrow.